Hey folks, Jordan with My Strategic Forecasts Inside the Numbers Live. And I want to take you through some of the trading we had on Friday because it was a pretty interesting day. There were a couple of stocks on the move trades, and we even had a live ES trade with David as we were doing a question and answer session. So it's pretty neat. I want to take you through a couple of them. So let's start off with the trade that I had in Asana, which was a really quick winner and one of the fast ones that we like to have first thing in the morning.
There we go. Just got my fill. I poked through the $20. Sorry, $21. Now, there was one that was added late that I didn't see. Let me put it in my gamut.
Order filled.
All right.
Order filled.
So I got out of part of Asana, then my second part of Asana. Wow, very, very nice trade there.
Last trade equals 162.00.
Order filled.
So I just took off another bit, and that is a really nice freaking trade there.
So at this point, we're deep into the question and answer session in the live room for Friday. And I'm going to play a large portion of it because there's some great and interesting learning material. And you'll get to see the trade that we both made. I made it in the micro futures, David made it in the mini ES futures, and it's really some great material.
So you've whittled it down.
Yeah, I have put less, certainly when the market was extremely volatile, less and less smaller companies on the board, only for the most part, not today, for example, because it's a different type of market, but when the volatility is expanded, I'm not putting those names we don't know on the board too often. If you notice that, you should notice that. Today, there's a couple of names we might not have known, but yesterday too, but that's okay. When, you know, I'm using other thing, here it comes. I'm using a read on the market each and every morning. What's really going on out there? Is it a...
I just got into the micro futures. 2 contracts.
I didn't get a fill yet. I was waiting a little lower. That's okay if you did. It's fine. This is the zone. You know, 20 cents, 30 cents, 40 cents on a $410 thing is, you have to understand and give it some leeway.
And I would look to add a little bit much lower. But that's how I'm playing it, obviously.
You'll start to see a little bit lower, you'll start to see the market jerk around if you're watching a shorter term chart. And when you start to see it jerk around, it's telling you they've hit something, you know, that has interest. You'll see. Do this together. There we come. Come on. Come on, Nelly. Now, what am I also looking at? I'm also looking at ES. There we go. I got one of them.
There you
ES, 4100, right? So that's important, even though the SPY was a little bit different at the time. So that's why I was saying a spike of 410. You start to read my mind a little bit.
go. I got you.
I'd like to get some more.
Now, would you call this a scalp setup,
I'm
or
calling it a, look, if they bounce right now and give you 7, 8, 9, 10 points, you have to take it. I'm taking it, even though I only have one contract right now, because I didn't get another one or another one, right? So I'm willing to buy a couple, 3 more, but with one, you have to pick a price. And if they give me a 7 to 10 point bounce, I'm going to have to take it. Or maybe they just fill me on the second one right here. Now, if you're doing, I'm talking to anybody out there, Jordan or anybody else, if you're doing the E-minis or the what's the other ones, the smaller ones?
micros?
Right. If you're doing those, it's very difficult to buy one. First of all, you can't make any money. And second of all, you have to pick a price to exit. So I would do those in at minimum of, multiples of something. They're too small. Just my opinion. You get 10 points, what are you going to make
$50.
on one contract? Yeah, it's not worth sitting there.
No, and
I mean,
they
it's good
cost
for practice, it's good for process and all that stuff, but if you're actually trying to do something, you have to do it in multiples. You have
They
to give
cost
yourself an
$3
opportunity to make
too.
something. So what's the bogey now? The bogey is they got to get back over 410 and a quarter, and they'll shoot up a little bit if they can stay up there. If not, they'll come down to 409.50, 60 in that neighborhood, which I'll still be a buyer. Like 410.65 is going to be some resistance, very short-term basis. But you really would like to get this back to 411, 411.30 in that neighborhood. That's the trade. And then any more than that is gravy or icing. But they still should probably come a little bit lower. This is why you wait for your price. Because even though I want them to come lower, I'm still in the money right now. That's fine. That's a nice place to be. So if they come down a little bit lower, that's okay. But if they stay where they are and they shoot up a little bit, I'll take some profit. That's okay. And they come back down again, I'll reload. I'll tell you if I'm doing that. Now you notice the transport's sold off. I'm just looking around the horn. IWM sold off a little bit. Financials are down. It's a tough tape. Yeah, here comes 410 and a quarter. Let's see what they do with that. If they can get over it, they're going to go to 410.65. Short-term stuff. The prize is over 411. But I still only have one contract, so I'm going to have to take a price long before 411. Just letting you inside my head on that one. I'll probably do the 410.65 in that neighborhood.
This is an interesting question. Is there ever a time where you will put a stop loss at break even when you have not gotten to your profit target?
Yes. 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 I'll explain it in a minute.
That's a good question.
It's a great question. I'm going to explain why, and it's going to be a great answer too. I don't want to do it while this is going on.
Well, that's fair.
Yeah, they spike 410 and a quarter, come back down. It's all normal garden variety crap. This is just the way it works. 409.73 low. No. 409.67. So I was right in the zone. 409.50 to 410. That's it.
I still remember one time when you said your favorite types of trades are lazy Friday afternoon pullbacks in the SPY.
Yeah, well, that was in a bull market. Now it's a little bit different, but they're still available. Let's get this thing. All right, let me answer that other question while this is cooking. So let's use the SPY as an example since we're all looking at it. So let's say I'm looking for 410.65 to get out of this particular trade, and it gets to 410.60 and it starts to immediately come back down and I don't get out. Forget the fact that I'm willing to buy more. Just assume that this is a different kind of trade where that was the price and I'm afraid it might go lower, not willing to buy more down there, whatever. So in this case, you get close to the target and they come right back down. You have to say to yourself, well, they came within a few pennies of what I was expecting for a minimum base hit. Now they're coming back down. I might have missed my opportunity. And the risk adverse thing to do is to get out, and you either missed it or they go lower and you get back in at another price or whatever the case is. But when they come up just short of a number and come all the way back down to your entry, you have to say to yourself, well, I might have missed my opportunity. I mean, just because they didn't give me the 5 cents extra I was looking for doesn't mean they didn't really do the thing. They kind of did. It's a game of inches, right? Sometimes it just don't miss by a penny or two. So you have to just look at it that way and say, why are they back down already? Now they could continue to bounce around. They do that all the time. We see it. But if you're in a trade, you have to protect profits. This is the name of the game. You have to be able to come back tomorrow with a full complement of an account. You can't gamble and say, well, it'll probably bounce later. You don't know that. It's mechanical.
Now, so here's a great question that came through. Well, let me do a follow-up and then I'm going to do I'll do a follow-up second. I'm going to ask this question first. Given that it came up 2 pennies short of the 409.65, do you have any concerns that it's going to want to go back down and get to that price?
Concerns? No, because they didn't hit my number yet. I mean, they hit the zone, but they could still go a little bit lower and it's completely fine. In other words, I was willing to buy it down at 409.50 and in between. So if they did that, because it's a bigger picture, I'm looking at not like a short-term chart. I'm looking at, for example, let's look at a 10-minute chart, and that's short-term anyway. But let's just look at the 10-minute chart, okay? So they moved down 7 candles and then put in a little tiny tail candle with a pseudo doji, right out of the course. What's that telling you? It may fail, but it's telling you that it's kind of working, right? That zone is working. So if they close below on a 10-minute candle, 409.67, I might raise some eyebrows. I might raise some questions, but I'm still going to buy more down there because I'm looking at a morning low possibility at a number I was looking for from 5 o'clock this morning. All that stuff together tells me that they shouldn't blow through this area. This should be support. Just might be not 409.50, might be 409, might be 409.75, whatever it is. It's a zone. And so I'm not concerned until they start. I'll tell you where I get concerned. I said it before, closing below 409 on candles, 10-minute, 15-minute, staying down there, that's a problem for this trade, for sure. They should bounce. They did bounce a little bit, but I didn't get out. I'm still in it. Look at them fight 410. I mean, this is normal. This is just totally normal, regardless of whether they're going to go lower or not. They're always going to fight numbers like that.
Now, let me do a follow-up question that I wanted to ask earlier, because I think it's one I've asked before, and I think it's a good one to answer, is that how do you balance trying to give a trade enough room to get to a target versus what you talked about where it comes up just short and you're like, all right, well, I'm just going to put the stop back at break even just in case?
Yeah, there's no easy answer to that. There's a lot of different factors that play in depending on what's going on in the market. So let's go through a couple of examples. Let's say the tape is bullish, the stock is down, you're entering the stock, it's bouncing around, the tape is bullish. I'm going to say, I'm going to give the bias to the fact that the tape is bullish and it should bounce the stock along with it. Any kind of rally in the normal S&P, kind of rising tide lift all boats. That's one thing. There's no magic answer because we know that stocks bounce around. What you have to keep in mind is these numbers that I give you. This will probably answer the question better than the other stuff. The numbers I give you are real numbers. We all know that by now, okay? But that doesn't mean that they always hit it and get out of there. Sometimes they test it for a while. We've seen this. Go look at the charts. Go put a line by my number and see what happened after, a couple of hours later. Even if it did bounce, how long did it take? Did it take 15 minutes? Did it take 20, 30, 40? So that doesn't mean the number's wrong. It just means they're testing it and testing it and testing it. The more they test it and the more they close candles above, generally speaking, the more it's telling you that that number's going to work until the point in which they're putting in a bearish pattern for too long. Then you have to just say, maybe it's not going to work. But, you give it half hour, 45 minutes, an hour, whatever, they can test the number. A number's not coming from a short-term chart. A number's coming generally from a longer-term chart. And therefore, if I just even talk about an hourly chart, I say if it's an hourly number off of an hourly chart, for them to test it within an hour, like for a period of time within an hour or so, is normal. That's the way the market works. That's why a daily chart, they spike a daily number, but if they close below it on the day or close above it, that's what I'm interested in. Same thing applies. Depends on what chart I got my number from. I'm generally getting my numbers off long-term charts. I mean, not generally, I am. For the stocks on the move stuff, that's not short-term stuff. There's a second one. It's awfully quiet. Come on. I don't know if it will, but that might have, you know, the way I'm looking at it, I'm saying, look, they made a low, they tried to bounce, they fake everybody out, then they come back down, they spike the low.
Last trade
If they-
equals 32.70.
If they bounce now and start getting out of here, it's a good sign. 410.25, still important. Anybody in this trade? I'm assuming there is.
Oh, yeah. Well, let's
I know, I'm just teasing.
Oh, somebody wrote that the VIX will tell us for certain. I didn't even notice, but it is true. It did get into that price level. Usually that is a help.
We don't need anything else other than the chart in front of us.
You got a few folks in it.
Just looking. I think they could still probe a little bit. I wouldn't be surprised if they just probe a little bit more. They don't have to, but if they did, I'm not getting nervous. Just letting you know. There's your 410.25 again. 410.65 is going to be my first exit.
Now, did you pick up a second contract or no?
I did. Everybody heard it.
Might have
Order
been in the bathroom.
Well, I heard it. I had an order. I always have that order filled thing, so I know what's going on. Here we go. This is what we signed up for. This is the point.
This is why I'm alive.
You wait and you wait and you wait until they give you your price. Now, at this point, that's it. It's just traders. I mean, they gave you enough. Look, I don't know, $800 right now. So this trade it worked. Okay, officially it worked. Now, I still haven't taken a profit yet, but that's just because I'm being a little greedy. I'm looking for another couple of points, but I'm going to take a profit.
I was looking for another half a point.
You're going to hear it go off in one more point. Come on. 4108 is my number.
That's the number I got too.
Come on.
Show me potato salad.
We'll do it. Look at that. They came to 410.62. Swines. But there's no chance, and this is a good example. There's absolutely zero chance at this point I am letting this trade not produce a profit. No chance whatsoever. I will stop out if this thing comes down and I'll still make $300 or $400. So I'm not going to let it go. Not on a Friday. No way. But I'm willing to ride it.
Order filled.
There you go. Now
Huzzah!
it's a risk-free, emotionless trade just for the kick of it, so I don't have to watch it all the time. I'm putting a sell stop down around where I'm still going to make like, you know, a couple $100 on the last contract. I only have 2. And I'm just going to let it go. If I get stopped out, I made a profit. And my next exit and my final exit on this trade for me would be a spike of 411.
So there you have it. That was a snippet from our live session with David on Friday. Some great, interesting material. We got a chance to go over some educational points, ask questions, and even took a trade with David in the live room. This is what the live room was designed to do, and it's what we're all about. We offer a 7-day free trial for you to check it out, make sure it's the right fit for you, and we would absolutely love to have you. My name is Jordan with My Strategic Forecasts, Inside the Numbers Live. Thanks for joining us.